Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report about a company selling off part of its business. It's like they're decluttering their house, but instead of old clothes, it's a whole division. Let's see why they're doing this and what it means for the company's future. This Form 8K, a current report, was filed by Matthews International Corporation on February 25, 2025. This is basically a quick update for investors about something important that happened. Matthews International Corporation, based in Pittsburgh, Pennsylvania, is the company we're focusing on. They're involved in a few different areas, but we'll see how this sale affects their overall business. This section is just legal boilerplate. It's about whether this report also fulfills other legal requirements. Nothing to worry about here. This tells us that Matthews International has its Class A common stock listed on the Nasdaq Global Select Market under the ticker symbol MATW. If you want to invest in this company, that's what you'd look for. Okay, here's the main event. On February 25, 2025, Matthews International announced that the waiting period required by something called the Hart-Scott-Rodino Antitrust Improvements Act of 1976 has expired. That's a mouthful, but it's important. This law is all about making sure big mergers and acquisitions don't hurt competition. The waiting period expiring means the government has had a look and isn't planning to block the sale of their stake in SGK Brand Solutions. Think of it like the government saying, okay, go ahead with your business deal. SGK Brand Solutions is the part of the business they're selling. What do they do exactly? Well, in simple terms, they are specialists in branding and design. They help companies create and manage their brands across different channels. The company also attached a press release as Exhibit 99.1. This press release gives more details about the sale. This refers to the official announcement that the company put out to the public. Let's see if we can find that press release. Unfortunately, the report doesn't give us the actual press release document with financial information, so we can't dive into the numbers for this deal. Usually, a press release like this would give some details like how much they're selling SGK Brand Solutions for, who they're selling it to, and how they plan to use the money they get from the sale. Since we are missing those numbers, we can't talk about the financial aspect here. So what can we make of this? It seems Matthews International is streamlining its operations, focusing on its core businesses. Companies often sell off divisions that don't fit their long-term strategy or that aren't performing as well as they'd like. Without the financial details, it's tough to say for sure why they're selling SGK, but it's likely part of a bigger plan to improve profitability or invest in other areas. This move suggests the company is actively managing its portfolio and making strategic decisions about its future. Now, let's think about what this could mean for Matthews International going forward. On one hand, selling SGK Brand Solutions might give them a cash injection that they can use to pay down debt, buy back stock, or invest in new opportunities. It could also allow them to focus their resources on their remaining businesses, potentially making them more efficient and profitable. On the other hand, they're losing a revenue stream, so they'll need to make sure their other businesses can make up for that loss. Looking at the bigger picture, Matthews International operates in a competitive environment. They face competition from other companies in the memorialization, industrial automation, and branding solutions markets. By selling off SGK Brand Solutions, they might be trying to sharpen their focus and better compete in these key areas. This could involve investing in new technologies, expanding into new markets, or making other acquisitions. So what's my take on all of this? I think this sale is a sign that Matthews International is serious about improving its performance and creating value for shareholders. While it's always a bit risky to sell off a part of your business, it can be a smart move if it allows you to focus on your strengths and invest in higher growth opportunities. The real test will be how they use the proceeds from the sale and whether they can successfully execute their long-term strategy. I'd keep a close eye on their future financial reports to see how this decision plays out. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more deep dives into corporate filings. Let me know in the comments what company you'd like me to decode next.